Good evening. Very warm welcome to Geo Institute Masterclass series for Management Specialization in Finance. We are excited to begin session 1 of the 5-part series. Today's topic is Finance for the Digital Age. Today, we'll explore how technology, AI, and FinTech are transforming finance and creating new opportunities. I am pleased to introduce our distinguished speaker, Professor 𝘔𝘢𝘴𝘵𝘦𝘳𝘪𝘢𝘴, former professor at IIM Calcutta and ex-director in charge of IIM Ranchi. A gold medalist from 𝘚𝘦𝘴𝘴𝘵 University and IIM Calcutta, he brings over 20 years of academic and 24 years of corporate experience. Professor Chakrabarti has taught at leading institutes and worked with organizations like UN, ONGC, HSBC, and ICICI Bank. Along with Professor Chakrabarti, we have Dr. Vishnu Prasad, Assistant Professor at Geo Institute, today with us as a moderator for the session. The session will include 20 minutes of presentation, a discussion between Professor Chakrabarti and Dr. Vishnu, followed by a Q&A session. I would now invite Dr. Vishnu to take over the session. Over to you, Dr. Vishnu.
Good evening, Mando. Today we will understand what this particular program is all about and what does Geo Institute offer and what is the overarching theme in the area of finance. So that is what we will deal with today. So I will give a very short introduction about what is PGP in management all about and what is the specialization that we deal with. Two specializations we have. One is marketing, another one is finance. So this particular program is actually a program that has digital incorporated with it, which means that AI, technology innovation, etc., incorporated with it, so that an individual would be future ready, and over the period of 10 to 15 years, they would be a leader material. That is what we expect out of this particular specific program. And this is a 1-year full-time residential program. And you would, for the entire full 1 year, you would be entirely in this particular campus of Geo Institute. So, and now let us understand why do we actually have this particular program. So, as you know, with the change of time, technology, AI has taken over certain aspects of business, and the business is evolving much more vigorously. So that is why we want to make sure that AI and digital forms the core of this particular program, over which these specialization, one in marketing and one in finance, rests. So that is what you are going to get out of this particular program. And our vision for this particular program is to cultivate future leaders. So any institution that develops need to have leaders over a period of time. So it's not an education for today, it's an education for tomorrow. So that is what we try to inculcate in this particular program. And the curriculum for this particular program will lie in the basics of analytics, lie in the basics of technology, over which you will learn marketing. If you choose marketing as a specialization, you will learn marketing. And if you choose finance as a specialization, you will choose finance. So career opportunities actually rest according to what is the specialization you have chosen. So for example, if you have chosen marketing, product management, digital marketing, or even business analyst to a certain extent, you will get those kind of careers. If you choose finance as a specialization, you will get financial analyst, risk manager, or for example, if you want to go into an AI kind of role also, you will get AI/analytics consultant as well. So consulting opportunities are also there in this specific roles that you actually choose. So that is what this particular program is about. And then what actually sets our program apart? So this is an integrated program with a dual specialization. So initially you would have a same curriculum across for both the specialization. After you complete the core of that particular program, then the specialization, people of two different specialization actually divide. So one is marketing, another one is finance. And the second key stand apart area is allied faculty. If you see the list of faculty that we have, so we have faculty from across the world and even from the industry, which means that the faculties that we provide here is of global standards, and that is what that makes a particular student very, very powerful in his own thinking, his own doing, etc. That is what we believe. And then, as you know, our programs are AI powered, which means that it is not only the word that AI powered is there. Each and every course that you do also has certain elements of technology and AI integrated with it. We also encourage people to do live projects as well as internships. along with this particular program. So previous year students actually do 3 to 4 live projects, as well as one internship of 2 months of industry immersion internship. So that way they get equipped for the job ready role. And then holistic leadership development, we have L&D sessions, etc., etc. That is well known. And it is a very rigorous structure. You have a specific program that starts, and after 3 months, you would have a live project, and after which you would have your internship coming in. Then you have study abroad immersion program where you actually go to Singapore or any other place for 14 days to understand what are the global culture, global learning, etc., over which you understand, learn from the global faculty there. And that is how this particular program is structured. So that way you, in the period of 12 months, you would actually get a lot of rigorous program structure that you. And then it has an immersive global experience, and it has internships, live projects, etc., that is already been covered. So that is what this particular PGP in management program is all about. And I would like to welcome Professor BBC to spend the next 20 to 30 minutes on how finance actually affects our life and what is the area of finance for the new age, digital age. So that is what we actually deal with in the next 20 minutes, after which we will have a chat for another 20 minutes, fireside chat for the next 20 minutes to understand what are the changes that are happening in the industry. How do the prospective candidates of PGP in management finance need to adapt for this particular future? So we welcome Professor BBC for this particular session. Thank you.
Thank you, Professor Vishnu. And good evening to all of you. Now, let me begin with the presentation, and then we can later on take your questions and for answering. Now, let me just share the material. Is it visible now?
Yes, sir.
Yeah. So let me make it full screen. It's okay. No, I think I will escape full screen. Yeah, so now as Professor Vishnu has talked about, that this is part of the program called PGP Management, and essentially I'll be talking about specialization, the area of specialization and of finance and what we do exactly. Now, well, when one tries to understand finance, what exactly one does. As a corporate person, we have to raise money and then ensure proper deployment. And proper deployment essentially to make, satisfy the stakeholders, and effectively, finally, the people who have given us the money, the shareholders. So if you are in the corporate sector, working for this sort of thing, raising money, deploying money, you need to have some set of knowledge, some ideas of different areas you have to have. But also there is a huge role of intermediaries in this particular activity, because these intermediaries, whether you call them investment bankers, or merchant bankers, or PVC companies, etc., they arrange money, they raise the money, or banks, they raise money, and essentially they also help in growing the money of the individuals and trusts and various organizations from whom they have raised the money. So it is both. The corporates need, whoever is trying to work in the corporate, need the knowledge, both for raising money and for deployment of money. And those who provide all other services, intermediary services, including consultants, investment bankers, and so on. So they also need to know, they need to have the domain knowledge. Because if I don't know what the corporates are looking for, obviously I can't grow the money which I have collected. So accordingly, this particular specialization has both sides. We will talk about what basic knowledge is required. Also, we'll talk about the new developments that have taken place. And let me just go through, and as Professor Vishnu has said, there is a core component in the entire program, core subjects, meaning everybody need to go through that. And later on, we have a specialization also. In fact, what has been done, you will see most of the areas of specialization that normally any business school or any institution provides have been provided here. Most of the courses have been provided here. Of course, depending on your interest, you may take many of them, or whichever you would like to choose, you can go ahead with that. So let me just start. So obviously then there will be a core component, and after that there will be also electives. And what is the objective? Objective is that those who raise money, deploy money in corporates, whatever anybody working there, the knowledge required, that we should provide. Secondly, there are a lot of intermediaries who will work. They don't deploy, but they raise money for deploying in various corporates and other areas. Now, what exactly they do, that also we need to know. So both these aspects have been covered, and later on, there are a lot of new developments have taken place. Just to say, for example, blockchain technology has come. Now, these are not very well used at this point of time, especially in Indian context. But when you want to raise money, blockchains can be used. So we need to tell our students what exactly the new things are happening. App banking has come. So we should tell them that app-based banking is there. We should tell, say, for example, people like you. We call you people digital clients. Now, the digital clients, basically, you do not want to go to a bank. You want something to be done 2 o'clock midnight. So all those facilities have slowly been provided. So we'll also spend some time on these issues. Okay. So let's have a look. Domain knowledge. First, trying to understand the domain knowledge, and we'll see the implications and how it can benefit whoever is going through that. Core or foundation module, as you call, these are the usual foundation modules. But if you want to understand finance, you need to know, for example, the basic documents, through which any stakeholder, any shareholder, etc., will try to understand a company. And that's basically we tell them those things through the course number 1, in term 1, financial reporting and analysis. And we won't like to teach you debit credit. That's not the intention here. But then finally, there are 3 documents which any corporate will provide to you, which is the profit and loss account or income statement, as we call, and the balance sheet, and these days the cash flow statement. Now, looking at these, what do you understand? So that background we'll try to create through this particular course. So it's not the accounting way of teaching. The teaching would be basically analyzing those reports, trying to understand how the company is doing and what can the company do. So even when you join as a consultant, you need to have this sound knowledge. So this is the focus in the case number, in term 1, the course number 1. That is the focus. Then essentially, if you term 2, we have management accounting. Essentially, money making is your return on money is more than the cost of the money. That is making money. That's how we make money. So essentially, then, if you suppose with the money you produce a product and sell in the market, the product or a service, whatever you do. Now, how much it has costed you, you need to find out. So management accounting tries to work out, provide you that particular information and data and how to do that. And so if you're working in any corporate, you want to do budgeting, or you're working in any consulting firm and you're trying to advise people what is to be done to make the company more profitable, this information will be very, very essential. So management accounting provides that sort of idea and that sort of knowledge, which will be useful both for corporations as well as for any consultant, investment banker who is trying to advise them what exactly to be done. So that is course number 2 in term 2. Then we move to corporate finance. Corporate finance, as I told you, essentially we have to raise the money and then deploy the money. Now, raising money from where, how, what is the cost of that money, and deploying what for, what is to be seen before deploying. So these basically we call essentially, the investment decision is required. But before investment, the money raising is also required. So cost of capital, at what cost we have raised the money. So cost of money, when you raise the money, and capital budgeting, meaning capital investment decision. Then there are other issues like capital structure, how much you should borrow. And borrowing is available, and you have seen everyday newspaper, you find borrowing creates all sorts of problems, and many companies are in trouble because of huge borrowings. So we'll have to see how much one should borrow, and then the shareholders, only way they may get money from the company is by dividend. There's no other way they can get the money. So how these things are done, what are the considerations? So these issues will be covered in term 3 corporate finance. If anyone has any question, you can note down, and later on during question answer, you can raise the issue. Then term 4, say investments. Essentially, whether you call households or you call trusts or you call companies, they have investable surplus. Now, these investable surplus, they may not be in a position to manage by themselves. So they will give to somebody else, a mutual fund or say bank or somewhere, or a private equity fund or a hedge fund, somewhere they will give the money. Now, those monies, what exactly do we do to make the money grow? So analyzing the investment opportunities, finding the investment opportunities.
Hello, Professor BBC, from the participant, we have a request if we can full screen the presentation.
Full screen? Well, I can, but then, okay. Is it okay now?
Yes, sir.
This material I can share to you also, and you can pass on to
Sure, sir. I will inform them.
So in case anybody wants. In fact, the brochure has most of the details. We'll have these details. Anyway, now I will also share to you, and whoever is interested, you can pass.
Sure. We will inform the participants.
The issue is that, say trillions and trillions of dollars are available throughout the globe, for investment. Now, how do we invest? Objective is to grow the money, and also there are other objectives, meaning, for example, we don't want to take unnecessary risk. So subject to a level of risk, how do we invest? So a lot of quantitative issues are here, like linear programming, etc., etc. So this is the area, and this is undertaken by all mutual funds do that, or any other fund, any trust who is managing money will have to do this, whether you call hedge fund or you call private equity, anybody will have to do that. Objective is grow the money subject to a level of risk. Now, how do we do? This is the whole objective. Okay. Then we move on to the advanced module. Term 5, there will be 3. This is the specialization area. Term 5, there will be 3 specialization courses. 3 courses are there in term 5. Now, as I said, that we have to prepare our students for various types of careers. Now, one career is, for example, if you join any financial consulting firm, many a time they get various sort of assignments. They have to advise what is to be done to make the company more valuable. Now, question is, first of all, if I have to tell you how you can be more valuable, first of all, I have to value you now. I have to know what is the valuation now, what is to be done. You see various conflicts all over the places. See, on the valuation, valuation is not a straightforward game, and there is no single method of valuation by which we can tell you this is the valuation of a particular company or a particular stock. Very difficult job, but then a lot of things have to be done. So the problem, one thing we need to always appreciate, any management issue, data is always the past data. But whatever we do with the past data is basically for the purpose of doing something in future. So past data used for future, this is a standard problem. But then past data is a guide. So the guide has to be, so for the purpose of understanding a company and how the company is doing, first of all, I have to do their valuation. This valuation means share valuation, valuation of shares, etc., etc. So that valuation is a course, interesting course, and lot of activities are there, and we need to look at and how it can be done. That's the objective of the course of business valuation. Okay, your forecasting skills, etc., etc. This should be considered. Then there are two sides of the story where corporate finance, as I said, that in corporate finance, a corporation takes money or buys money. They will buy the money. Buy money from where? So they have to go to different markets. Different markets, they have to go. From the market, they have to collect the money. They have to go to equity market, IPO, etc., whatever, to collect the equity. And they have to go to the bond market to collect the bond money. They have to go to the bank to collect the bank money. Then there are also other issues. So for example, money is available within our country. So domestic money raising is possible. Also possible abroad. Abroad possible meaning there are two areas. One, you can go to the foreign market. Also, you can go to the Euro market. Now, how do we differentiate these markets? See, domestic market means a company registered in India raises money in India for use in India. That is domestic. But suppose we want money in dollar. That's also necessary. We do also. And for raising money in dollar, we go to US. Then it is a foreign market. We have gone to a foreign market, meaning in that market where this particular currency is the domestic currency. But these days, dollar is also available outside US. So outside US also you can get yen is available outside Japan, and our companies are raising those monies also. So we need to know these markets. So stock market discussion we will have under investments. Investment, a part of this discussion which I just talked about, will be on the how stock markets are functioning, how it can be done. Bond market, we have a course later, we'll talk about that. Now, also we have the derivative market. Derivative market is risk management market. Risk management market, but risk management meaning you have a risk. Say, for example, just to let you know, say, for example, you are flying abroad, say, today, the month of let's say, October, and you want to go in the month of March. You can get a ticket right now. But the airlines who gives you the ticket, I'm just giving one example just to make it little interesting. Airlines who gives you the ticket, now they have a problem. Problem is this, that almost 50% of their cost is the fuel cost. ATF, aviation turbine fuel. Now, suppose that cost goes up by 25%. You will not give any extra money. So what do they do now? So that's why they need to hedge. HEDG, hedge. The word hedge means eliminate the price risk. So methods can be applied. We can use forwards, futures, options, etc. to take care of these sort of problems. So price risk management will be the subject matter of derivative market. Any item has two markets, spot market and also derivative market. Definition of spot market is you immediately procure, immediately buy, or immediately do the transaction, and pricing is also done immediately. That is the spot market. But derivative market will be transaction later, but pricing done today, immediate pricing, future transaction. So every product, whether you call oil or you call any stock, any item, have two markets. So sound knowledge in today's world of derivative markets is very, very important. Whether you are a corporate finance person or you are a consultant or you are an investment banker, this is a big area. And also you are a trader. If you are managing your own money, you have to do something in this area. So we provide a sound knowledge in this particular course. Then we are not adding too many market courses in one term because it will be heavy. In that case, students will find it little difficult. So that's why the fixed income market is in the next term. So mergers and acquisition. Mergers and acquisition, yes. One of the growth strategies through acquire other companies or merge yourself with another company. This is a very done thing. Value addition can take place, value creation can take place through this process. There are continuously various companies are trying to acquire other companies or getting merged with some other company. So this is an interesting area, especially for consultants and also for the corporates who want to do that. So you will know all the famous cases. ArcelorMittal, they took over the steel company in that is in Germany. Tatas have taken over steel companies and car companies in UK like that. So obviously, mergers and acquisitions play as a normally very high ticket business here. So how to do this? How to structure? And a very important part of any such thing is due diligence, meaning we get some information, we have to verify. How do we do that? All these things will be covered under mergers and acquisitions. So especially those who are in consulting area, or even you are in a corporate, we normally as a corporate, we engage some consultant to advise us know exactly the price and the method. So this is an important course, mergers and acquisitions. Okay. Now, then we move to the next other two more terms, and term number 6. Term number 6, and we have 3 courses, like as we said earlier, fixed income market, investment banking, and financial risk management. Fixed income, essentially meaning, if you say fixed income, many people ask the question, what do you mean by this? Where the income is fixed. Say you do fixed deposits in a bank, income is known. So it's not always fixed. Sometimes it's a fixed figure. Sometimes we give you a formula by which you know exactly how much you will get. So whether it's a fixed rate market or a floating rate market, those all come under fixed income. This is a huge market, definitely more than 3 times the size of the global equity market. So a lot of money flow takes place here. So various issues. This is slightly more complicated than normal stock market because the pricing becomes a very complicated problem here. But anyway, we'll provide you all the skills by which you can do that. So fixed income market, again, as I said, any market has two sides, spot market as well as the derivative market. Here also those things will be there. So essentially, in fact, some of you may be knowing that FICC trading, FICC traders, if you join BlackRock or anywhere, they have a category of employees called FICC trader. FICC means fixed income, currency, and commodity. And it's a highly paying profession. So fixed income part, we provide you knowledge here. Okay. Now, then coming to investment banking, many of you would like to join. And in fact, investment bankers are part of the entire corporate structure. Because corporates want to raise money, they give the assignment to an investment banker. India, money raising, we call them merchant bankers. Primarily similar job. Or for any other purpose, mergers and acquisitions, we also take the help of investment bankers. So all these things, so investment banking, basically essentially meaning helping to raise the money and provide other services, other advisory services, those M&A services, etc., various structuring services, restructuring services they provide. So these investment bankers, what exactly they do, how they do, so that will be the coverage in this particular course. Then now coming to the other side, financial risk management, essentially, see, there are 3 types of risks, financial management, wherever you do, whatever you do. One is a market risk, other is a credit risk, and the third is the operational risk. Market risk means risks, I just can't do anything. Say, for example, interest rate going up, a corporate by themselves can do nothing. So that's the market risk for them. So I have invested, for example, in stock market. Stock prices go down or go up. That's a risk for me. I have nothing to do. But I am either a beneficiary or a victim of all those changes. So that's the market risk, which I don't have any control. Credit problem is basically whenever you give money, this fixed income area, give money, we have to get back the money. Now, it's not that always we get back the money. So essentially, so that's the problem, credit problem. And in my opinion, the single most important problem in any corporate structure is the credit problem. We can't collect all the money. And you know the famous case of Nirav Modi, PNB lost about 13,000 crore. So what do they do now? So these issues and operational risk, meaning it can be for various reasons, people stealing the money or computer not working or something happens, and all those issues have to be looked into properly. And this is also a consulting area. The consultants provide this service. And here we have to measure the risk and how to manage the risk. Both have to be talked about. So we talk about the market risk, we talk about the credit risk, and we talk about the operational risk. Measurement of the risks and managing also the techniques of management, these also can be dealt here. Okay. Then we have term 7, and that's the last term, term 7 now. Term 7, yeah. That is the last term. And I think apart from that, you have the visits to Singapore and other internship, etc. So elective term, the last term, this is we also have 3 courses here. So these 3 courses here one is the corporate financial strategy. And so if you are working anywhere, even when you are in the corporate or you are providing the advisory service, one of the basic thing is value creation. And how do we do that? Now, apart from, say, for example, taking over a company is a financial strategy. Or, for example, reducing our cost of capital by some income generating derivative transaction, that's a financial strategy. So many such things can be done. So apart from the standard issues, or for example, realigning your debt equity ratio. So it's also a strategy by which you can add the value to the company. So quite a few, this is a case-based, it will be a case-based course, and whether you are in advisory or in consulting or corporate finance area, we will provide you the basic inputs, various real-life situations through which you will understand how different organizations created more value for their organization. Say, for example, Hilton Hotel. Now, there was a private equity buyout by Blackstone. Now, naturally, at the end of the whole exercise, the value of Hilton has gone up, meaning the value has gone up, meaning shareholders or new shareholders, old shareholders have gone, new shareholders have now got a company by which they can make more money. So these sort of various issues, it's a case-based course, and we will cover quite a few cases so that you understand how in real life many companies use various methods, and to increase the value for the shareholder. And that's ultimately the objective of any corporate enterprise. And then we have a course called Private Equity Venture Capital. Now, common consideration or common view will be these are separate activities. Venture capital for startups and private equity for growth equity. Well, that's the normal way people understand, but people like us, we say all are private equities because private equity stands for equity to private company. So venture capital is also equity to private companies, and also growth equity also equity to private companies. When a company is listed, etc., that time providing money will not give us a lot of gains. Because one thing you have to understand that any investor has quite a few options. And how much time I have left? Another 5 minutes? Okay?
Yes, sir.
Yeah. So see, if suppose you are very happy with 2-3% of return on your money, you can go to savings deposits in State Bank of India. They will give you 2.8%. And suppose you are looking for more money, and say 6%, around 6% type, you can go for time deposits. Suppose you are looking for more money, then people will advise you go for the equity market. Equity market, whoever may be saying anything, but in my view, somewhere around 12 to 15% on the average over a longer period you can get. So that's it. Now, after that, where do you go? After that is this PVC market, private equity. These are basically funds. They create the funds and deploy the funds. This PVC fund, the effort is to make around 20-25%. So if you are an investor, these are also called alternative investments. So if you are invested in these funds, well, so you can, if the private equity company is well managed, you will roughly may get 20-25%. But the risk is there. So that's why the government all over the world do not want ordinary people to invest here. It's like in India, we have a threshold of 1 crore. Minimum 1 crore to invest in a private equity fund if you want to take their services. So anyway, but so that is where these people come in, 20-25% return. And after this, only hedge fund. That hedge fund, basically, they look for 30-40%. And if you are hoping for something more, there is no method which we can advise. Probably you have to do some gambling somewhere and to make some extra money. But private equity, venture capital, they serve a purpose. They serve a purpose. Now, I'll not prolong my discussion, but just to let you know one particular why we need these people, or why do we need these organizations which are funded by venture capitals and private equity. Just one example, okay? Say 1946, in MIT, USA, 2 students suddenly found, when we take your photograph, meaning outside photograph, your end of the ear, end of the nose, like that. They found a method by which they can take internal photograph. So we call it imaging. This was 1946. But so the student didn't understand the implication, but that's the time first VC company in the world was set up, which is ARD, American Research and Development, also in Boston. Now they understood, and you see what those 2 students did. So these ARD provided funding to those students to develop it. You see now what they did. That is today's your X-ray, CT scan, MRI, all basically the work started from there. So as such, from social purpose, or for the society, benefit of society, we need these organizations, these private equity, venture capital. So what we do here is a social requirement. How these are formed, how do they operate, how do they earn money, how do they leave the various investment, all those things we cover. Basically, they have to raise the money, they have to again deploy the money, and they have to get out of the investment. So you see a lot of, in India also, a lot of IPOs are coming, Paytm came, and so many others are coming, practically for the exit of their funding agency. That's the reason they have come there. So we provide those knowledge, and this is a very interesting area. A lot of job opportunities and also entrepreneurship opportunities are there in this area. So a lot of our students all over the places have formed organizations who work as a VC or like that. So this is an interesting area which we should see that you learn something more. Then come to FinTech, and FinTech is a subject which I started in 2017 in India, so almost 8 years now. FinTech has developed after the global financial crisis, so meaning from 2009 onwards. Paytm also started around that time. So FinTech is what basically we do in FinTech. FinTech meaning, say, take an example, most of you, those whoever is here right now, all of you are probably using Google Pay or Phone Pay or something like that, some such service for payments. Now, what exactly happens? How it is done? So essentially, technology is being used to provide a financial service. So we use technology to provide the financial service, and it's beneficial to you. And that's why you are using see all these payment methods. So essentially, FinTech is disruption of financial services. Various services we take. And so now what is the purpose of this disruption? Three things. Lower cost and ease of doing, convenience, ease of access, and should be lower cost and available whenever we feel like. So all these things, so access, cost, and finally the benefit that we get. And all these things are brought together in this particular FinTech area. A lot of new things have happened in the world. Artificial intelligence has come. Say, for example, today, algo trading is a done thing in many major markets. The Indian market also 50 to 60% stock trading is done through algos. And US market, NYSE also 60 to 70% is done. But algo trading then basically gone are those days of trying to guess what some entrepreneur is thinking, whether to invest or not. It provides you some methodology, some algorithm through which you can do the trading. There are various objectives of doing that, but that is available now. So we use that thing. High frequency trading has come. Blockchain has come in a big way. See, blockchain is a technology. Do not confuse blockchain with cryptocurrencies. Cryptocurrency uses blockchain, okay, but blockchain is a technology like your internet is a technology. Similarly, so blockchains have come. People are using for their supply chain also, the procurement. We can use for money raising. We can use for money disbursing. So many things can be done. So blockchain has various applications. So we provide all those knowledge. And so many other things. Say, for example, KYC system, blockchain-based KYC have come. Okay, and say your foreign currency, remittances. Earlier used to take around 4 or 5 days. Now we have technology available by which it can be done in few seconds. So those technologies are there. So all these things we provide knowledge in this FinTech. Robo-advisory, meaning people like you. You don't need to go to any consultant and take the advice. On your own, sitting in your house, on the computer, you can make your investment. So that robo meaning robotic advisory system. So most of the banks most of the insurance companies and other people have wealth management people have got into these activities. So robo advisory services, especially for wealth management, can be done. Payment, I talked about. Lending also, P2P lending has come, digital lending has come. You don't need to visit any place. Sitting in your house, you can do all these things. So this FinTech, this uses our chatbots have come, virtual assistants have come. So all these can be done in a big way. And this is disrupting the market for financial services really in a big way, because I told you I started teaching this in 2017. And the growth actually started only in 2009 or 10. So within these 15 years, you see everywhere you talk about FinTech. And if you look at the money being invested in FinTech, is huge. The VC area, the maximum funding is happening in the FinTech area these days. So this we provide, what exactly done, how it is done, to the extent we can provide, and we can give you the knowledge through this FinTech course. So if you're a blockchain developer, even IT people can see, if you're working in IT, you need the domain knowledge, without which you can't work. You will be simply a coder. If you want to do IT consulting, domain knowledge necessary if you want to work in the BFSI area. So all those things we provide in this. So like these, there are many, and we can keep on adding more courses, but not necessary. And this is a wholesome, in my opinion, and having taught almost in 10 institutions all over the world, this is a wholesome offering which you can gain, and you can choose whichever you feel like, and then finally gain sufficient knowledge which will be helpful. Now, I think I'll stop here. Objective was to introduce the various courses that we are likely to offer. And then, of course, if you have any question, I can answer right now. But more or less, I think, in my opinion, and almost entire area of the finance is covered, including the new developments which have taken place. in India and all over the world. So thank you very much for giving me this opportunity for the presentation. Now we go to the next phase of the master class. Okay.
Professor, so while many focus on new age digital aspects, you emphasize on the enduring core. So,
Yeah.
for example, many actually focus on AI, blockchain, etc., but our enduring core remains to be the traditional finance modules like corporate finance, valuation, etc.,
Yeah.
etc. So now, don't you have emphasized that it has become more critical than before? So, why is it has become more critical than before that the world is, though the world
See,
is?
question is domain knowledge, there can't be any substitute. Okay. So essentially the domain knowledge is this. Whether you are working in a corporate area or a consulting area or even IT companies who are providing services to BFSI, now they have one set of people who will do the coding, who will write the program, but also they need people who can tell them what to do. So without the domain knowledge, so anywhere in the world, if you want to learn finance, they always tell you quantitative aspects, quantitative various issues. In fact, prior to this, you should be knowing statistics well, probability well, because we need to have predictions. And how do we do prediction? Time series you need to know. So I'm not covering those areas. Those have to be also known. So if you want to do a job, proper job, any of these areas, you need to know domain knowledge of finance. You need to know quantitative areas. You need to know geopolitics. You need to know macroeconomics. So there is no substitute to this knowledge. And then, of course, your intuition, always it will play a big role. So that is why the whole objective, if suppose I had taught only FinTech, you'll be able to do nothing. Say, okay, you can become a blockchain developer, but that's all you can do. So it is necessary, in my opinion, whether we do today or maybe after some time also, few years later also. And this has been there for a pretty long time. New things have been added in the syllabus these days. Like private equity earlier was not there. We have brought in. FinTech was not there. We have brought in. And some such domain expertise is necessary. So that's why it is. And then, of course, the students' interest. So that's why more courses are in the elective area. So if somebody feels he doesn't need that knowledge, he can just give up. That part, he can't do that, need not do that. Okay.
Yes, Professor. Professor, if we look at, as you introduce private equity, as you introduce fintech, what do you feel that looking beyond the traditional roles in finance, what is the role that would be in demand for the next 10 to 15 years so that the new age role that people need to look at and currently undervalued? So what do you feel that the next big thing would be in finance? Big role in finance?
No, see, big thing meaning corporations have to grow. And world GDP is growing at roughly at the rate of 3%, global GDP, which is around 300 trillion. So by the time you take another, say, 10 years, so 10 years, essentially you will have 300 trillion might become close to 400 trillion. So the volumes are there, business is growing, this is growing. So we need the basic knowledge. The basic knowledge is if some company has to grow, they need money. Now, where from money? Money now is global money. So how do we raise the money? Where from we raise the money? Well, see, the digital methods, etc., as I told you, earlier forex transfer in India from India used to take sometimes 7 days. Later on, it became 3-4 days. Now it can be even few seconds. So digital part is that. Earlier lending was you had to go to, say, bank and talk to the manager. Manager will look at you, take your document, do visits, etc. Now the whole thing and digital lending can be done subject to proper KYC check. Just you you don't even need to visit. We can do video KYC of yours. So you don't need to come to us. So technology is helping to smoothen the process, ease of doing, convenience, access. But basic things remain. So more money raising will be needed and global money raising. And globalization of money raising started in 1957 or so, around that time. India only after 1991, when we had the liberalization. But then, as I said, if the business and the companies have to grow. And as the GDP is growing, roughly 3%, you can check the IMF data. So more money is required to do things. See, only with money you can do. And process of getting money, deploying money, that can be smoothed. That is the purpose of FinTech. And private equity is another new asset class has come because they are providing, who will provide money to a startup? Tell me. So this entrepreneur, as an entrepreneur also, our students can finally become an entrepreneur. And they have, if they know how VCs give money, and if they orient themselves towards that, they can get money from the VCs. So new things are these. These are the new things. Money raising is necessary to be done. But new ways of doing things and easier ways of doing things have come due to technology. AI has come for forecasting. Say, for example, fraud management. I'll just give you an example, fraud management. I am a card holder. Now, card holder, SBI card holder. So I am located in Kolkata. 2:30 midnight, I get a call from SBI. Sir, on your card, 2 transactions are right now happening in Malaysia. Are you there? Now, obviously, they have, say, 1 million cards. How could they know that something is happening on my card? And nice of them, they called me. I said no, so they stopped that. This fraud detection, this is technology is helping there. And nobody is checking my card, what is happening continuously. It's not possible to do. But technology, pop-up is there, and they will let you know. So digital disruption is coming, has come, has come. But then those are helping the entire process of raising money and deploying money. This is the point. Okay.
Right.
Thank you so much, Professor BBC and Professor Vishnu, to give more insightful talk about this particular topic, finance for the digital age. We are moving on to the last section, that is Q&A. I will read out a few questions for you, Professor BBC, and you can answer them from the Q&A box. So we have one question.
Yes.
Yeah, So Mr. Krishna, he's asking, sir, can you explain about weekly derivatives and monthly derivatives? And what is the difference between future and options? What is the open interest?
See, I certainly can do all these, but that will take little time. And just to let you know, this particular course, derivatives in India, was started by me in 1995. Okay, and so in Calcutta those days. So, it's essentially a discussion required. Now, let me tell you. So futures and options. He is wanting the difference between these two. Am I right? What exactly is the question? Difference between futures and options. What is open interest? Am I right?
Correct. Yes, sir.
See, futures and options, as I told you, if you say derivative, meaning something will happen later, but I do the pricing today. Okay, right. Now let's suppose, take an example. So, Mr. Krishna, okay, his name?
Yes, sir.
Mr. Krishna, you are the seller, I'm the buyer. Suppose let's take a straight example. Now, you and I say, I want to buy Reliance shares after 1 month. Okay. So you will be the seller, I am the buyer, right? Okay. And now, can I show some slide here? It will take a little time, but to explain it will be much better by showing the slide. Okay. Can I do that?
Yes, sir, you can. Yes.
But it will take time. So I think.
Yeah.
Okay. So what we can do, say Mr. Krishna and you, me, we can do nothing now. Nothing we need to do now. And then we wait for 1 month later. Say today is 14th of October, 14th November. That day we check the price and whatever is the price, I buy from you at that price. Now, problem for you is Today price is say 1350. You are thinking if price goes down, then you are in trouble. Problem for me is if price goes up, I am in trouble. So to settle this matter, you and I can finalize the price. So today suppose 1350, and I tell you I will buy from you and I agree, we have to agree that we buy at 1370 rupees. Now you see uncertainty is gone, because after 1 month I will pay you 1370 and you will give me the share. Now, so this is a future transaction later. So it's a derivative transaction. Now this transaction I'm doing with you only. So you are the seller, I am the buyer. So we follow the law of the land and we can do the transaction. This we call forward market, meaning only two of us involved. If we don't violate any law of the land, this is all right. But then, and problem of this particular contract is, suppose after 15 days I find prices are going down. I want to get out of this contract, but you won't allow me to get out without a violation. Then legal recourse you have. So alternately, we can do the same thing through National Stock Exchange. National Stock Exchange, so you want to sell, you get ICICI Securities to work for you, they will work for you. I want to buy, I take Axis Security, they will work for me. And through the exchange, we can do the transaction. Advantage of that transaction is that after 15 days, I want to get out. You don't want to get out. I want to get out. You remain where you are. I get out, and Professor Vishnu gets in. I sell, he buys. So that is the advantage going through the exchange. This we call a futures. There is one S, futures transaction. So forward transaction between two of us. Every transaction is transaction in future, pricing today. That is common everywhere. So forward futures, you have understood the difference. Now let's go to option. Option meaning, say, we can do, see, when we do between Mr. Krishna and you and me, we call this OTC market, over the counter market. And if we do through the NSE, we call the exchange traded market, through the exchange. Now option can be in both markets. Now suppose we do the OTC market. You and I do a transaction that I will buy from you after 1 month at 1370 rupees. If I want to buy, I add that particular clause. Now, if I want to buy, then now suppose 1370, that time I see the market price 1390. I tell you, please sell me at 1370. But suppose that time price is 1340. I tell you, no, I'm not interested anymore. So this gives me a right to do, but without any obligation to do. This is the option game. So now you will ask the question, why should you do it? Well, since I'm getting a benefit, I have to pay you something in advance. Like insurance companies take a premium. You'll get a premium from me. You will be thinking, oh, I have pocketed the premium. The price will anyway go down, go up. There will be no exercise by Professor 𝘔𝘍𝑕 Chakrabarti. But I'm thinking after paying premium also, it will be all right. My prices will go up and I'll be able to recover. So that thing, see, divergence of opinion is at the root cause, is the root cause of any transaction. That is there. So options will mean right to do, no obligation to do. Same transaction, if you work like that, it's an option game. So in brief, but all these in detail we'll be discussing there. Open interest meaning number of contracts which are still outstanding in the market. Say, if you're a day trader, suppose everybody is a day trader like in equity market, largest number is the day trader. In that case, nothing remains at the end. Say in the morning, 11 o'clock I buy and 2 o'clock I sell. So nothing will remain in the market. But in these markets, some contracts will still remain open, meaning till the final settlement date. So that figure is popularly known as the open interest. Number of contracts, whether in the futures market or in the option market, which are still open, awaiting settlement at the end of the period. Right? Roughly. These are the things we discuss in detail over 3 credits, 30 hours in that particular course.
Yeah.
Professor, there is some interest on the derivatives side. A lot of participants are asking derivatives questions. So what we can do is that over a period of time, we can have a short masterclass on derivatives itself. So
yeah,
that can be done.
You don't note down the questions and let me know. I'll prepare some slides so that quickly it can be done. Rather than this sort of discussion will not be useful unless we tell them some facts and figures. Okay.
Correct. So can we take the next question, sir?
Yeah. Tell me.
Yeah. So the next question is from Jeet. What challenges can I face as I am coming from physics background and now want to switch into finance?
Yeah. What is his name?
Jeet. Mr. Jeet.
Mr. G. See, physics background meaning you are analytical is the first thing. See, today I'm in finance. I'm basically an engineer. Now, so the capability that you have is analysis, mathematics, analysis. That's why you're a physics student. So question is here, see, when you want to study management, discipline is not important. Like even an English language student also can learn, provided he or she chooses the right elective. So all these courses should be, because see, finance means analysis, analytical subject, problem solving subject. These are all those areas. See, if I have to tell you, say, AI methods, FinTech methods, everywhere you will find I'm talking about, say, encryption method. Encryption methods you'll find I'll be talking about mod values, etc. These are all known to you. So it will be useful, helpful. But of course, you have to decide whether you like to switch your career. And because I have done switching in my life from engineering, I was shop floor engineer. They said a lot of years I worked in the factories also. But later on, I got into finance. So it's an additive knowledge. Your background is not it's not a problem, in my opinion. Okay, provided of course you have to put your heart and soul in this particular area, and you will be able to do that. See, your basic background is good because you must be good in mathematics and analysis and problem solving, which is basically the best main things that you need in these courses. Okay.
Okay, sir. I think Jeet has got his answer. So we'll move to the next question. Miss Anushri want to ask, sir, can you please list about few upcoming job opportunities available in this sector?
Which sector?
The finance sector.
The overall job opportunities, if you can say, Professor. The
question is here. Now, see, will money raising anytime stop in the world? Answer is no. Will surplus with households and say people like you, you are, I'm assuming you are 25-year-old or 30-year-old. Now, I also assume that you will work another 30 years or 35 years. Every month you have a surplus. So what do you do with this surplus? You can't spend this money in restaurants and holiday. Even then you'll have a surplus. So somewhere you'll give this money. Somebody will have to manage this money. So say private equity market is $8 trillion in the world. So essentially, supply of investable surplus, such things are there, will remain all the time. Corporation, limited liability companies will be there all the time because no entrepreneur wants to take the full risk of any business. So proprietorship is there, yeah, shops and establishments run by the proprietor. But Reliance will not be run by the proprietor. They will run, but they will not have only limited liability. So if limited liability is there, naturally they grow, naturally they raise to raise money, naturally they have to do capital investments. So that role is there, and they will need the services of various intermediaries. See, software people, even if you're a software, IT coder, IT consulting, I'm not saying simply coding. Coding is actually with AI, coding will be drastically diminished. So now with IT consulting, what do you consult, say in the BFSI sector? You give consulting services to banks, you give consulting services to corporations, etc. But there, these domain knowledge will be useful. So essentially, I am yet to find a person who specialized in finance and nothing he could do. I have not seen anybody in my life. So from 95 onwards, today almost 30 years, I'm in this sector. And of course, you may say that you have seen, see, for example, banks will never stop. So in the city of London, more than 300,000 people work in bank, more than 400,000 people work in insurance. So in city of Bombay also huge figures are there, and people are retiring, new people are needed. So opportunities are there, but you have to be one up also, meaning you should learn the subjects properly and be ready to apply, be ready to take the jump into the bandwagon. That's the way. So opportunities are there. It's not a dead subject. Will never be dead subject. As I told you, investments will continue to come. Corporates will be continuing to grow. And I told you, good thing in the world is world GDP is growing continuously. India is growing heavily also. 6.5% is very high growth rate. So if those things are there, opportunities are there. But if you say, I will do only stockbroking, that there may be a limitation because people are now going into, say, digitally doing all this. In fact, when NSE came in 90s, so basically the trading has become completely digital, online trading. And we had 22 or 23 stock exchanges. Now left are only 2. So transformation will take place. Yes, transformation will take place. But overall opportunities are certainly there. And you have to start your life somewhere and then proceed as the opportunities come. Okay?
Okay. I think I'm taking the last question for the session. We have Ms. Anamika. Her question is, how data analytics is transforming the finance sector in India?
See, our main problem is prediction. See, I told you, any management has one major problem. Entire data that I have is past. And whatever I do, actions, etc. for future. Now, how to understand the data so that I can do a better prediction for future? So this is a standard job. Analytics is playing a big role. Big data is playing a big role, etc., etc. Customer experiences are changing because of data, and prediction accuracies are quantum finance has come. I have not discussed these issues in the area of price forecasting. Our main problem is forecasting. If anything you can do to do a better forecasting, that is always a better thing. Better things can happen as a result of that. So analytics plays a big role in not only in finance, all areas these days. Whether in marketing analytics, HR analytics also have come. So essentially, as I told you, any management is use that past data and work for the future. Now, using the past data, I can't assume history will repeat. Now, how to predict? Now, that's the role of the analytics. Okay. So we have to adopt. We have to adopt and adapt to all these realities. And tools and techniques are available. More are getting developed. So good things are happening.
Thank you so much, sir.
Yeah.
Thank you, Professor, for sharing your knowledge across the prospective audience of the management program. And we would like to thank the audience as well for asking good questions and being kind audience. Thank you all.
Thank you, Professor 𝘔𝘬𝘳𝘪𝘀 Chakrabarti, for taking out time and sharing an insightful presentation and a very detailed discussion on the topic. We will definitely share the presentation with the participants because a lot of participants want these insights. And I would again thank all the audience for joining today's session. We will host more such sessions with the more elaborative knowledge on few different topics. Stay connected with us. Thank you so much.